Hello, everyone. A very warm welcome from Fires. I'm Vignesh, and I am the influencer marketing expert at Fires, a company where we strive to provide a robust, dependable, and efficient platform for our clients to trade on. And today, we're hosting a brand new webinar in partnership with GoCharting. The topic for today's webinar is Introduction to Orderflow using GoCharting. Give me one moment. Yes, I'm sorry about that. Just a little bit of technical difficulty. So let's welcome our amazing speakers who will be sharing their knowledge on topics that will surely help you enhance your trading experience. Please welcome Angad and Santosh. Angad is a directional trader with a focus on order flow and market profile, who is presently GoCharting's head of marketing. And Santosh, an expert in intraday trading. Santosh has an incredible 15 years of trading experience covering areas including automated trading, profiles, order flow, and option analytics. Today, you can expect to get in-depth knowledge on points like understanding order flow and its advantages. Why does order flow give an advantage? Explained using simple examples. Understanding the GoCharting platform, which is a unique web-based charting and order flow analytics platform, and an overview of GoCharting's features. I know that learning is impossible without questions, so after the speakers have finished imparting their knowledge, we will have a Q&A session. To ask your questions, you can use the Q&A option in Zoom, or if you are viewing this webinar on YouTube, you can also use a live chat feature. We will try and answer as many questions as we can. Without further ado, let's continue our journey of learning with our speakers. Over to you, Angad. Angad, kindly unmute yourself, please.
Thank you, Vignesh. Good evening, guys. I hope everyone is excited. Firstly, I and the entire GoCharting team would like to thank Vignesh and his team. His teammate Naresh, who's been working diligently behind the scenes to get you all of this premium content. I also want to extend my thanks to the entire Fires team for giving us this platform. Thank you, guys. Lastly, I want to thank each one of you who is logged in on a Friday evening. It signals your commitment to learning. And so I promise you that by the end of this video, each one of you will leave with practical knowledge that will help you take better informed, safe trades. With that being said, order flow does not replace your trading setups or styles, but rather complements and enhances it, whether it be price action or anything else. But before I proceed, I have also with me my mentor, my colleague and dear friend, Mr. Santosh. He has been trading in the futures market for a lot of years, 15 years to be exact. He trades in crude, Bitcoin, Bank Nifty, you name it, he trades. He is an expert in day trading. He is an expert in order flow day trading, to be specific. And he's been diligently building his community, with which he shares his market maps early in the morning without charging anything. And he's been doing this for a long time. So I would ask you guys to check him out later. Our agenda for today is that I'll give you a quick introduction about what GoCharting is for those for some power Fires users. They know about GoCharting, but they don't know the depth of our software, and some others who are probably fresh, who've just arrived and on the scene, and they might not have heard about us. Okay. Once I give a quick introduction about our platform, I will quickly pass on the mic to Mr. Santosh, who thanks Santosh for doing this on such short notice. He's my mentor. You'll get to know about order flow much more deeply than I can do justice to the topic. Okay. I will also introduce you to a few key concepts as well before we go to agenda number 2. Okay. So let me share my screen. Yeah, just a second. Right. Can you guys see my screen?
Yes, we can see the screen.
Perfect. Thank you, guys. Since we are short on time, I'm going to power through this quickly and succinctly. GoCharting is not just any other charting application. It's actually a ultra low latency multi-asset tool for data charting, profiles, and order flow and options analytics. A lot of words in one sentence, but to give you tell you in short, it's we have no data issues. We are very fast. We have the complete suite what you expect from a charting platform. We are multi-broker, so you can connect to your favorite brokers. I suggest you connect to Fires and use GoCharting on Fires. Fires is very safe, fast, and a power-packed broker, right? So why GoCharting, right? Why do you want to shift to GoCharting, right? We have 150 plus built-in technical indicators and drawing tools, which are probably premium tools on other charting platforms. We have 14 advanced charts for intraday trading, for swing trading, for a lot of other things, namely, for example, Renko charts, point and figure charts, Heikin-Ashi candle charts, and our showstopper charts, which are cluster charts and imbalance charts, which fall under the category of order flow. We will get to it pretty soon, but right now we just need to know about this. We have multiple chart layouts. We don't limit the user. We can let people open multiple tabs. We have multiple monitor support. Basically, the whole point is to democratize these advanced tools and empower the retail trader, right? Who can take better informed decisions. And how do we do that? We do that with profiling tools and order flow tools, two of our most advanced tool sets, which professional traders in hedge funds, in banks, so traders who are moving big size, doing big trades, use them. And now for the first time ever in India, we have democratized access to this at a very, very affordable rate of around 1,200 rupees per month, right? Along with that, we have our standard 100 plus advanced drawing tools. So you can, draw your support resistances. You can do multiple advanced studies. I suggest, I motivate you to, go and check us out. We have our standard tool sets. We have our standard charts. And on top of it, we have some incredible tool sets to help you take better informed decisions with your trades. So profiling, we'll lightly touch on the topic of profiling later on, but just to give you a quick introduction as to, market and volume profile charts are basically volume charts, profiling charts, or market profiling charts are basically charts which will help you determine where are the market participants, whether the strength or the weakness of the trend, to gauge that, and to actually get insight into it levels the playing field of a retail trader, if I have to say. Okay, you get to understand what is actually happening behind that candle. You get to uncover the secrets, essentially, to say the list behind these by using these tools. Okay, we have multiple types of these profiles, which we will go over in a quick short span of time later on, right? And then there are other tools which fall under the order flow suite, which are time and sales with alerts, DOM charts, cluster and imbalance charts, delta bars, and divergence to know the strength and weakness of the markets. If you don't know what this all of this jargon means, don't worry at all. People who know, they know about this. But eventually, Mr. Santosh, who I'm going to pass on the mic right now, will introduce you. He will actually take you right from a beginner, what I call an uninformed trader, to an informed trader, so that tomorrow when you sit on Monday to trade, if you have GoCharting, you will take a trade with high conviction, with less anxiety. You will not quit your successful trades very early on, and you can book your losses pretty much ASAP with very minimal losses based on these tools. Essentially, this helps a retail trader um, be on the same level field of a professional trader, or like we like to say, the FIIs of the market, right? Essentially. Cool. Let's move on to Mr. Santosh. Please, give a invite him to this call, to this video. I pass on the mic to Mr. Santosh to take over and help us understand this beautiful concept of order flow, which we are here for.
Hey, hello, can you hear me?
Yes, we can
Okay.
hear. Santosh.
Okay, great. Thank you everybody for joining, and thank you both, Vignesh and Angad. Great introductions overall in terms of GoCharting and what the intent of this program. Okay, so guys, I saw some of the chats which said Hindi and English both, so we'll try and cover in Hindi and English both. Bear with me. इसके बाद अगर कोई भी क्वेश्चन पूछना है ड्यूरिंग Q&A आप हिंदी में भी पूछ सकते हैं, कोई ये नहीं है, बट तब तक मैं दोनों कवर करने की कोशिश करता हूँ, ठीक है. So generally, order flow charts mein what are the features available in GoCharting? Abhi just look at the names, don't bother ki what I'm talking about. We have time and sales charts, which is basically every trade that gets happened. You see in a graphical format in a trade, like in a trade book like this. Aapko, you can see these trades happening. You can see which is a bigger trade, which is a large trade. You always know that स्मार्ट प्लेयर्स और बिग प्लेयर्स और ये सब जो टर्मिनोलॉजीज यूज होते हैं, दे आर बेसिकली लार्जर प्लेयर्स, लार्जर बुक प्लेयर्स. So you can actually see those trades happening real time, and you can see a plot of those trades. That way you'll know which prices big trades have happened. Okay, what orders are in the market, that you can see. Eventually, which prices big trades have happened, and if they are market orders or not is reflected in a footprint or an order flow chart or a cluster chart. There are different ways this chart is called. The data in all of them is the same, and largely it's about understanding aggressive market buyers and aggressive market sellers. Okay, the data is the same. They're known as different names, so you'll somewhere hear talking about it order flow, somewhere you'll hear it as your footprint, somewhere you'll hear it as your um, as I said, imbalance and other charts. Okay, so I will cover to that as well. हम लोग उस पे जाएंगे, तो इसको काफी अलग अलग नाम से जाना जाता है, as I said, footprint, order flow, imbalance and all that, but eventually ये market sellers and market buyers को represent करते हैं. It helps you to look inside a candle. Okay. So if you see this, okay, today when you talk about trading, most of you are most, I'm assuming, if you're new to order flow or you're new to footprint, आपको आप लोग आज की date पे what you use is this block of things. Okay, you use candlesticks, you use indicators. Okay, this is what you tend to use in your market today. Okay, and in market, in life, or any anywhere that we deal with, it's an information arbitrage that we are talking about. It's a advantage of faster information and reliable information that we are talking about. Okay, so if you see market data, so what happens in a market? In a market, transactions are happening. People, there are thousands of buyers and thousands of sellers जो order डालते हैं, which place orders, and which also sort of trade those markets, right? So all orders are, if you see the way the information flows in the market. Okay, the way the information flows in the market is all orders are reflected in something called as a DOM, which is depth of market. So any order coming to the market is reflected as a depth of market. Okay, any order that gets traded is reflected as a trade book in the market. Okay, any order eventually that is aggregated into a footprint sort of an information. Okay, and then if you see you have a LTP or last traded price, or price that you see in your screen, basically in your broker screen, your broker terminals and things like that. Again, different LTPs in a certain time frame, let's say 5-minute candle, 10-minute candle, okay, is represented in a candlestick chart. Okay, and then over let's say when you have price over a 1 day, 10, half an hour, 1 hour, whatever you say, you plot indicators on of it. If you see a formula of any indicator, it is just derived on either price or volume. So it's an average of certain averages or certain calculations based on price and volume. आप RSI ले लीजिए, आप MACD ले लीजिए, आप कोई भी इंडिकेटर देखिए, ठीक है. So information का speed क्या होता है? अगर देखेंगे तो सबसे fastest information in the market जो that the the institutional players or any other players that you see is is all DOM. Okay, then you have trade book, then you have footprint, then you have LTP, and then you have candlesticks and other things. Okay, so this is the slowest information that you see, and this is what you tend to read, you tend to understand. Okay, so most of the time, okay, that is a challenge where again a lot of traders sometimes fail because they see this as the slowest information. DOM is depth of market. Okay, so now when you are seeing that candlesticks and indicator, the slowest indicator, we want to understand and read information a little earlier. That is where DOM, tradebook, and other things come in. Challenge with DOM and tradebooks is they are too fast. Sometimes they are too fast for you to interpret, and so hence the sometimes DOM is orders placed, it is not traded orders. So DOM what will happen in a DOM is basically a lot of orders do get cancelled, and then you hear terms like spoofing and other things. Okay, so that's where a DOM sort of is a less reliability of information or persistence of information, you might say. While indicator, once I know, let's say RSI is crossed over 30, it will probably stay over 30 for a certain period of time. And hence it's the most persistent information compared to anything else. Okay, so that is an advantage where we pick indicators, and that is an advantage, let's say, or indicators over DOM. But at the same time, what is a compromise you're making? The compromise you're making is you are compromising on information arbitrage. So you're getting the information of what has happened in the market a lot more late than, let's say, a DOM guy or a trade book guy or a footprint guy. Okay, so that's where I think footprint, if you see overall, comes in a very sweet spot between DOM and trade book on one side, and your candlesticks, price, and indicators on the other side. Okay, so it is neither too fast like a DOM, it is neither too non-persistent. The data, once it is printed on a footprint, it stays on, and it is not too slow as a price or an indicator or other thing. Okay, where you have an advantage over normal candlesticks charts basically. Okay, now what do you get additionally from I'm assuming most of the people here are candlestick users, or some would use footprints, probably, I'm sure. And so what is the advantage of candlesticks and footprint? Basically footprints over candlestick. Okay, so candlesticks we do use to pick market patterns and other things. That is a very common thing. So I want to see a head and shoulder pattern, I want to see a breakout pattern, breakdown pattern. That candlesticks you can see, footprints also you can see the same, of course. Okay, then projection, making projections in the market mein projection karna ki okay, what can be my next price target based on certain Elliott waves and Fibonacci's and pivots and things like that. You can do in candlestick patterns, you can do also in footprint patterns, of course. Okay, so footprints is a blowout of the candlesticks pattern basically. Okay, can you see the order flow in candlestick? No, you cannot. Candlesticks, you cannot see the order flow inside. You just see one candle, which is open, high, low, close. It could be a 5-minute, 10-minute, 1 hour, 1 day candle, but you eventually see only 4 data points: open, high, low, and close, and maybe the volume of the candle. But you do not see what is inside the candle. That's where footprint comes in. Okay, a candlestick will not show you aggressive market participants. So what is aggressive market participants? Okay, aggressive market participants are somebody who are who are market buyers and sellers, because eventually the aggressive market participants are the ones that are moving the prices. Okay, you have to really understand that they are the one who is moving the prices. We'll come to that how and how it works, but you actually see what drives the market, who are driving whether a buyer is driving the market at this point or a seller is driving the market. So you can see that one of the most common problems of a retail trader is getting trapped, okay, or in a stop loss or being a strap trader, etc. You cannot see that in a candlestick, especially breakouts, breakdowns, failures. I'll show some examples when you come to the end of it, but here you can see those trap traders through order flow. You can visualize that, you can identify stop loss hunting, and you can figure out that this could be a wrong breakout or a breakdown, and probably not a right trade to get into. Sometimes avoiding a false breakout or a breakdown itself is a one, saves you money, two, probably gives you an opportunity to take a reversal trade. Okay, then see the dominant side of each candle, because within a candle you see a red bar or a green bar, so that way you try to anticipate whether it's more buyer strength or seller strength. But there are instances when, despite a red bar or a green bar, a seller is dominating or a buyer is dominating. You would not figure out until things turn after that candle. So you can actually see it in an order flow chart. Okay, confirm support and resistances real time. I might plot my support, I might plot my resistances, I might make my projections, but eventually, are those viable? Are those working in market today? Are they actually getting respected today when I'm opening the chart and trading in the morning? That's where I will come and validate it with my order flow. Okay, and then put market defined stops and targets. Another thing is sometimes we want to put stop losses and target. A very common norm is put a fixed percentage stop loss or a fixed percentage target, or put a stop loss, some high low and things like that. But here you can actually put a stop losses based on what you see, where actually buyers came in or where sellers came in, and that level is going to be defended. So that is where your advantage is to put a market defined stop loss or a target. Okay. Then managing risk with your candlestick data. So sometimes you have situations, and not sometimes, I would say very often we have situations when probably a bank nifty does a 200-point candle, or a and now if I want to really enter in after that candle, do I keep a 200-point stop loss? Is there something better we can do within that 200-point? Order flow will give you that level. Okay, within that 200-point, probably I have a support somewhere in 70 points below, and it is a better stop loss than a 200-point stop loss, because if that 70-point below level breaks, market will probably reverse. So I can really manage my risk much better with this. Okay, that way. So what do you see in an order flow chart typically? Most common charts that you see is a candlestick charts, which is this. Okay, typically open, high, low, close, and volumes that I said. Okay, in an order flow chart, it's the same candlestick chart if you see eventually at the end of it. But what do you see is on the left side, sell trades that has happened in the market. So market sell orders. Remember, not all sell trades, but market sell orders, and market buy orders that has happened on the right side. So we call it sold at the bid and bought at the ask. So basically called as a bid ask chart, or a imbalance chart, or a cluster chart. Eventually the information is the same. I'm repeating. Confuse mat ho jaiye ki alag alag cheezein, alag alag charts hain. It's the same chart. The information is the same, where you have bid, matlab sellers on the left side, buyers on the right side, market ke buyers, sellers, and that's the only fundamental concept. If you want to take anything home today, you understand this concept, and then you start really applying it next month. So I'm sure you'll not grasp everything today, but it's fine, don't worry about it. Okay, so that is what you see. So within a candle, I can now see within this candle, okay, the most dominant sell and buy position was somewhere here. It was not at this low or this high. The most dominant guy was sitting somewhere here. Okay, if you see subsequent candle, it never crossed below this. Okay, but we'll come to that. Okay, so it gives you an inside view of the market, represent the real picture, as I said, who is dominant. So does order flow work everywhere? It does not. So I can tell you firmly with my experience, and when I say with my experience, I've really traded a lot of markets. Okay, so it does work for any good high volume market, good liquidity. So we have a community where we trade Nifty, Bank Nifty, crude, Bitcoin, everything around using the same set of principles, same set of charts, and it does work. Okay, and there are guys who do stocks also. Preferably, it is used in futures market, liquid commodities, fixed income with high liquidity. Those sort of markets are good. Okay, so preferably that's the preference. So if you say any low liquidity, low float stocks, I would say no. FX market, the challenge is sometimes you want to apply on FX markets. The challenge is there are multiple liquidity pools, because you have to understand, there are different exchanges where they get traded, but it's a topic outside this, will not cover this. Similarly, commodities, they have a lot of physical contract settlement and those things happen, but it does work on commodities. It does excellently work on crude, even on MCX crude, while it is dependent on global crude. Surprisingly, it does work excellently on in crude. Cryptos have tested it on the BTC ETH thing. It does work. So it does work across markets. Okay. So now the understanding the concept of why are we only looking at market buyers and market sellers? Why not everybody? Okay, why not everybody? So that's a question that you should ask. The reason is what they are classified as passive and active. Let's say, okay, so a limit buyer or a limit seller is somewhere sitting in the market. Let's say the current price of this market is at 60,000 something. Okay, and you have a limit seller sitting at 62,000 and you have a limit buyer sitting at 60,000. Okay, this guy is just placed an order in the market, so he's just sitting there. He's not driving the market. It's like I've gone to purchase something and somebody has quoted, okay, I want to sell at 200. Another guy says I want to buy at 100. But so there are two orders in the market which will not drive the market. The price will just stay at 60,000 unless somebody decides to do something about it. Basically, somebody decides to buy either at 60,000 or this level, or sell at this level, right? Okay, so till that point, I think no market will not really sorry, not really my bad, move, right? So that's where an aggressive buyer or a active buyer comes in. So an aggressive buyer who decides to punch a market order and say, okay, I'll take the next best sell order, or I'll take the next buy order. So the fundamental concept behind the market order flow is that Market order is the one that is moving the market. Okay, it's not the limit order or and that's where when you go back to the previous chart, order flow charts, we are trying to track the market orders because they are the one who are trying to move the markets. Okay, so only if a new buyer comes in and decides to take a higher price will, if market, let's say Nifty is trading at 17,990 and there is a seller sitting at 18,000. Okay, somebody has to decide, okay, I'll take the 18,000 sell order, and so I'll buy at 18,000 to print an LTP of 18,000. Else market will just stay paused at 17,990 doing nothing. Okay, so passive sellers, they wait for prices. They are not really bothered about the market movement, so they will wait for prices to come to them. You have to understand, they are waiting for prices. They are generally large players. Institutional players are fundamentally known as or believed to be passive players, though a lot of that is changing with quant trading and other things, but generally they are the ones who are known as passive players. Okay, they are placed in market orders. Okay, they can be false sometimes. That is where spoofing comes in, where they place market orders and things like that. And if you've heard stories about spoofing, you've heard story about flash crash and all, they're all drive by where large orders are placed and then suddenly the order is pulled out when price is near that price, okay, level. Okay, so they can be false. That is the risk of passive. Okay, but then you can see the large orders. Aggressive, they react to prices. So I am a market buyer, let's say, of I anticipate market will go up. I'll just buy. I'll not wait for market to come back to a level or something. We'll just buy that order, right? Basically, we'll make a market order and buy that order. They are aggressive. They react to prices. They're generally the smaller players, but they represent the finalized order. You have to understand, they're not only the smaller players, but they're also sometimes large players. We see large order flow prints, but they represent the finalized orders in the market. So once it's traded. There is no taking back that data point. If a 50,000 quantity has got traded at a certain price, it stays. It doesn't move. I mean, that data will not change for you. Okay, so they are the ones that is moving the markets, and hence the fundamentally we are trying to track order flow as a as our sort of a tool, basically, where we want to see the market buyers and sellers. Okay, now information difference. Okay, what are the information that we see? Candlestick, as I said, you have a bullish green candle, you have volume of, let's say, XYZ. Okay, what are the things that you're seeing? Volume, you're seeing open, high, low, close. Now imagine I'm suddenly giving you from a candlestick chart to a bid-ask chart, basically, or a footprint chart. Your information increases by at least 7 to 8x in terms of number of data fields that are available. So suddenly your ability to analyze, your ability to interpret the increases manifold. You can see it's a bullish candle. Of course, you can see the volume. You can see delta. What is delta? Delta is the net of buy minus sell. So in this particular candle, I see a delta 40 million, let's say, which essentially means 40 40 million or 40,000, whatever you see, the number is more traded compared to buyers traded than sellers. So I can clearly see buyers were dominant in this green candle. Okay, I can see the POC of the candle. POC is nothing but point of control, which means the most traded point in the candle. I can see that clearly. So if it's as I said, if it's a 200-point candle, I know within the 200-point what is relevant for me. Okay, I can see the volume zones within the candle. I can clearly see that this section had the largest volume. Then there were some volumes here at the top as well. So, nothing here, nothing below here. So I can clearly see what are the volumes that are there. Okay, then I can also see the relative change in delta, how delta is moving throughout the day. For this, when I say delta is moving, this is not an option delta. This is a bid-ask order flow delta, which is nothing. Again, I'll repeat. ये buyer minus seller का difference है. The difference of buyers minus seller. Okay, that is the difference. Okay, each candle का delta एक निकलेगा. आपका जैसे open, high, low, close निकलता है. Each candle will have its own delta, which is essentially buyer minus seller. Total number of market buyers on the right side minus on the sell side is what will give you a delta. Please take a note. Okay, so these are the additional information that I'll see. So suddenly I'm able to infer one bullish candle, one buyers dominant, more buyers around the top, so expecting maybe continuation. I can see important point within that candle kahan par hai. I can see how the delta is changing throughout the day. So these are the these are the other things that we can really see what is changing and what is not changing throughout the day, right? So these things you can see. Okay, just a second. Okay, just a second. Okay, I'll just quickly explain also for you, before we go to some examples. कि ये सारे चीजें क्या है, what are the things, as I said. So each each order flow candle we break it down into a node, basically. So you want to understand ये blocks क्या दिख रहा है, what are these blocks, right? Basically एक एक करके. So we just break it down to a node. One node is nothing, an aggregation of a few points, 1 point, 2 point or lesser on the candle. So basically, if it's a if it's a, let's say, 10-point candle, as a total 10-point candle, I can just break it down to a node of 1 point each. If it's a 100-point candle, I can break it down to a node of 10 point each. Okay, so then it just shows me an aggregated data of that 10 point or 1 point each node का जो data है buy sell equivalent मुझे दिखाता है. It just shows you the buy minus sell for each node. So depending on which chart year you're trading, you will try to customize your node size in your order flow chart in GoCharting. So if it's a high value chart, let's say in, something like Bank Nifty, which is 20, not 20, 40,000, right? No, so 40,000. So what you will do is you will have a higher node value so that you can, combine those points in a reasonable manner. You will not have 1 point node in that case, because one Bank Nifty candle is 100 point, then you'll see 100 data points. We'll use a higher node size. Similarly, if it's a Nifty or a smaller stock of 100 rupees, I'll try to use a lower node size there so that we are able to aggregate, put the information in a reasonable manner in our chart windows, basically. Okay, then we have this volume, which is, as I said, by total volume. Delta we see in this candle, delta is, let's say, negative, because there are more sellers than buyers, as an example. Then you can also see cumulative delta, which is basically sum of delta of that entire day. So each candle it plots its own delta. Let's say first candle ka aapka delta 100 hai, next candle ka delta 100 again. So your total delta cumulative becomes for the day 200. Third candle, if the delta is minus 50, then your total delta becomes 200 minus 50, 150. Okay. So you see the open, high, low, close. You see each node, what is the buyer seller. You see the point of control, okay, which is the highest traded volume. It is automatically highlighted. You don't have to do anything. It will automatically get highlighted in the tool. Okay, and you see, as I said, the darkness will also of darkness, and the you see the color histogram is there, right? Which essentially helps you see where visually very quickly, if you don't want to look at the number, that the darker it is, okay, more volumes got traded in this zone. So this zone is relevant to me. More volumes got traded here at the top. So this zone is relevant to me. So that way, where more active buyers and sellers have participated, and you really know within that candle or within the movement which zones are relevant to you. Okay. Okay. Now we'll cover some examples quickly, for the lack of time. I think we just want to also show you what are the benefits, and we have not really picked any specific examples. We've picked charts from very recent days, actually 1 or 2 days, to really show you examples. If I ask you a trader here in the forum, what is your biggest problem, or how do you, most of the guys will say false breakout, false breakdowns, okay, getting trapped in a wrong trade. Okay, these are things that we get into. A lot of us are probably good at analyzing the market. Okay, I know market can sort of go up from here or go down from here, but where to place my stop, or I got stuck in a false bad entry, basically false trade and all those things. So we really have to, if we combine order flow with your candlestick and other analysis, you don't have to, as Angad pointed out, you don't have to leave your current state of analysis, but try to blend in order flow with your analysis, and you'll see some good examples. Okay, this is, I think, yeah, yesterday, I guess so. Yes, this is yesterday expiry day Bank Nifty chart, by the way. Okay, so what we had a strong gap up opening, right? Okay, so post a gap up, it was hitting close to 40,000 level. Okay, so most of you might think, okay, this is where sellers will come in, or because markets have been weak, I do not know whether market will mean revert or not, it will come back or not. So how do we analyze that gap up? Will the gap up work? Will that gap up not work? How do we analyze that? So if you see, we saw the opening candles, and I think we discussed in our community also that there are distinct large buyers present at this 39,950 and 40,000 levels. Okay, so we said, okay, this is the potential support area in the market, and until this is broken, we use pullback to these levels to go long and play on the long side. Okay, so despite a gap up, despite a strong move, as a trader, our first thing is whether it's going to continue or whether it's going to reverse. And I think we always get stuck in that conundrum, or either we get in too late, That's another problem. Or we get into a wrong side. So how do we, quickly judge? Okay, green candle, great candle. If I did not show you the order flow, all you see it is a green candle. All you will say, okay, this candle low or this candle low is my stop loss. So you have a really low level to, and market may not even come down to that lower point where 39,900 and etc., where you get an entry. I want an intermediate entry. I want a level where markets can actually work, and a level that is generated real time by the orders in the market. It is not a level that I have projected with my some analysis and things like that. Okay. I guess the recording has stopped for some reason. Hello.
Vignesh, is the recording going on?
We'll just take a pause, guys. Just hold on, please. Okay, thank you. So we in this case, what we did, we picked up a market generated level, which is if you see, which is about 40,000 levels, 40,000 odd levels, 40,000 levels. And if you see, price came back to this point, and price peak came back to this point, and then again came back to this point, and then it went on a one-way journey up. Okay, so this is where we use, as I said, context was a gap up opening, no support resistance. So it was a gap up, no, and I never had a trade in 40,000 levels in near term. So we do not know what has happened in the past, in recent times, in that level, whether that level was support or resistance. So I have to rely on market generated information to figure out whether I have a new support and resistance which I can play on today. Okay, and then it's all about taking a probabilistic guess on the market. At the end of it, every trade is a probability. All we're trying to figure out is, can I use more data, order flow, the bid ask data, to improve my probability in the market. That's all. That's the game for all of us. Okay, no, nothing is a certain trade, nothing is 100% trade. All our game is to analyze data, take more data, and just try and improve our game. That's all. Okay, so this was the first example where we traded a gap up. We traded try to understand what happened, and found the intermediate level, real-time market level, and actually push the trade through on the upside. Okay. The second one is, again, most common scenario, very common, it happens to all, I'm sure, so is getting trapped in a false breakout or a breakdown. Okay, in this case, if you see, market had created previous highs here around this level, and then there was a breakout above this level. Okay, and then the breakout completely reversed. So if I was just looking at candlesticks, it's very difficult to figure out why this breakout failed. But if I now just zoom into the order flow chart, I can clearly see that there were a lot of buyers that came in. Okay, a lot of buyers came in. All these yellow ones are highlighted buyers. Again, this is a feature that can be offered by the chart, where you see large imbalanced buyers being highlighted. The yellow ones are highlighted buyers. A lot of buyers came in, and they were not able to push this through, and then eventually prices fell down. Why this happened? For sure, there were limit sellers sitting at these levels, which are more larger than the buyers. It's like, 1,000 लोगों ने यहाँ पर buy किया, 1,000 people tried to buy, but maybe there is a big guy sitting with a 1,500 sell order. So all 1,000 consumed, and there is nothing more to buy, and then the market stops and reverse. Okay, so here when I see this chart, I can clearly figure out, yes, buying attempt happened, it failed. I'll quickly have even if I've entered the trade, I'll quickly have a very aggressive stop loss. I'll not really wait for too much of information, or I'll just get out of this trade, probably take a reversal trade here. Okay, which is something that is not possible if you're just looking at footprint, candlestick charts basically, right? Okay, clear. The third thing is, confirming a breakout. So sometimes the next question is, okay, when do I see a breakout again? In this case, market was trading in a range, if you see, for a long time, nothing much on the footprint chart, no big orders, nothing. Okay, large orders, if you see, not many oranges you are seeing there. Okay, then we have a breakout, green candle. Okay, what did you see? Large number of buyers here, large number of buyers. If you see, the number of sellers and the buy quantity is many times more, 5,000 to 20,000, many times more. Okay, so that clearly shows strong buyer, strong candle. Now I know this breakout has confirmed and the price has sustained here. All I need to do is try and follow through. Keep trading very simple. Try to understand what market participants are doing. Our job, we are small traders. I mean, all of us at our level, I'm sure is nothing compared to an FII. Okay, and all we are trying to do is understand what has happened in the market, which guy has been a dominant player, and then try to just piggyback on them. That's all. Unke piche, bas, that's all. Either pick a market failure or pick a market breakout and try to trade that trade. Have a good stop loss in place. You manage your risk much better, and get a decent risk reward. That's all. Okay. I think these are the three scenarios we wanted to discuss. And as I said, if you want to go to try out GoCharting, it's www.gocharting.com. It has, I think what Angad also did not mention, but what is the thing is it's a web-based platform. So you really don't need to install anything. You really don't need to do anything. Okay, you just take a subscription of a data, you run it on your Chrome or any browser, and you're on. If you need these charts, I've shared these chart templates. You don't need to, if I'm using a normal desktop software, a lot of configuration and other things I have to do. In this case, you don't need to do anything. I've shared the templates in the forums and all. You just copy paste and use these templates, and you can get this chart started from the next day if you really want. Okay, and try them out. I mean, it's worth the platform, and for for whatever the price is, because all these, and I've been using Orderflow for a long time, and this was really something that was not affordable for a long time for for a normal retail guy, I would say, but now it is. And I'm sure it will give you a lot of edge. So you get the standard candlesticks anyway, so you do get the candlesticks, you get the order flow, you also get the market profile and other volume profile if you want to use it. So it's all bundled into that data pack, so there is nothing extra, it's all bundled into the data pack. Okay. And the another thing is they are very strongly integrated with the Fires ecosystem, so you can really trade on Fires through that as well. So that's another advantage. So you decide to trade through the Fires interface, or directly trade from the GoCharting charts with your Fires ID, you can do that. I think we'll take a pause here, we'll take questions. I don't know if you've run over a bit of time, but yeah.
No. Santoshji, there's one repeated question which people have been asking is, what is the time frame you've been using on this particular chart? And I think if you can lightly touch upon your, 15-minute, 5-minute, what are the time frames do we use while, trading this?
Okay, so if I day trading, I would say, think of the counter. Okay, if it's a Nifty or a Bank Nifty, generally where the total duration is 7-8 hours a day, let's say 8 hours a day, I think a good point that I use it probably is 15 minutes for understanding the market structure, the profile and other things. Okay, and then use 5 minutes for your footprint and order flow charts. Okay, if something like a crude, okay, then I would say you can start looking at or a Bitcoin, you can start looking at a higher time frame where probably a 15-minute charts as an order flow chart itself is sensible. Okay, what I can say is if you're really getting started, guys, on order flow, try to have a larger block size. Okay, this restricts the bit of compromises a bit of information, but helps you analyze it a little better, let's say. And then eventually, I don't think there is any substitute of good screen time, honestly, or how much I try to sell everything, but eventually screen time is important. So but try to have a larger block size if you're getting started. Try on a 5-minute, 15-minute charts. Okay, and there is enough support on both if your GoCharting forum and also FNO traders forum, so you can really check out one of them. There's enough support available to assist you getting started. Okay, no, don't worry about adapting it and getting started. I think there is enough support, and as I said, very good integration with Fires. I think one of the earliest adapters of this tool has been Fires, which has been great because they have been proactive around this. So kudos to them also. So they have been able to bring this onto your ecosystem much earlier than any other broker. Okay, any other questions or anything maybe?
Very nicely explained. Thank you so much, Santoshji. I do have a few more questions coming up on our YouTube. So Kranti wants to know, do you have any formula for maximum and minimum delta?
That's a very common question that we get. Okay, I think there are a couple of YouTube guys who talk about trying to simplify order flow with a max minimum delta, but my take here is look at relative delta shift. I have said in many forums already, don't look at a specific number. It's trying to oversimplify a certain thing, but don't look at a specific number. Look at a relative shift in delta between certain candles. Okay, between, let's say, what has happened till now throughout the day, and then a candle comes in. Don't look at a number. I know what numbers get talked about, like 40K for Bank Nifty and things like that, but don't look at that sort of a number. Actually, I know what context it is coming from, but look at a relative shift in delta. Make things simple, but don't make things too simple to oversimplify certain things. Markets are not that simple sometimes. Okay, so yeah, look at a relative change in delta, Kranti.
Thank you so much for that. So Doji, I have another question here. So here's one person, he wants to know, can we see limit order and sellers in GoCharting?
You cannot, it's not about GoCharting. I think it's more about the way the data feeds in India work. I think there are two challenges. One, I think the NSE data feeds are prohibitively expensive to see limit orders. Okay. And second is, in Indian market, the tick size is very lower compared to, let's say, US markets. Okay, so in S&P a tick size is 0.5 for a counter of 4,000. So if you take 10 ticks in S&P, it is basically 5 points, which is great for a 4,000 counter 5-point movement. Okay, in our case, our tick size is 0.05. So now you take 10 ticks in Bank Nifty, it is basically 0.25 points. So 20 ticks combined make 1 point in Bank Nifty basically. Okay, so if I even see last 10 orders or last 20 orders, I'm just talking about seeing next 1 point in Bank Nifty, which is meaningless. Okay, so you do not see, it's not about a platform restriction. It's about, I think, our data feed and our the way tick size for Indian markets are. So what you do is you try to interpret with the buyer seller information. Okay, there is enough educational content, I might say, if I provided how to interpret all these things. Okay, in the FNO traders thing, and you'll pick up over time. I think that's also a bit of art you pick up over time. That's what you love actually picking up. That's your edge eventually, I'll tell you honestly.
Thank you so much for that. So we do have another question here. Arpit Sharma wants to know, do you make users learn how to use Delta, River, etc. also?
So I don't specifically make users learn, but I have shared a lot of stuff. Okay, and it's all free. I mean, all the learning stuff is free. It's available. I've shared a lot of things, and then we have active forums where you discuss day-to-day, charts. So you can come in and just see those videos if you like, and you'll pick up over time. So there is nothing here. No specific individual thing that I'm doing. Yeah.
Brilliant, brilliant. You can actually stop sharing your screen now.
Oh,
Unless,
okay, that is better.
any particular question comes up that requires you to share your screen. Okay, so Yash wants to know, can we use this for swing trading?
Yes, so you can, but what you do is you start using it on a higher time frame. Especially what I've seen is, if you have a fundamental or a swing analysis in the markets, okay, and then you really want to refine your entry exits, okay, where you see, okay, buyers have come in or buyers, sellers have given up. Let's say I'm taking a pullback long. Okay, that will show you through these charts. So what I'm using in swing trading here, or what I generally tell people is, have your swing analysis based on your core, let's say, other charts like fundamentals or technicals, other technicals. Refine your entry exits through this. It's, to be very fair, it's more of a short-term tool, but if you want to use it, I'm sometimes using it on a 30-minute charts to refine the entry exits basically. Okay, on a 30-minute chart you really get to see, okay, let's say a buy has happened, then sellers really gave up at some point, and that's when you get a very good entry. Instead of taking a breakout entry, you get a good pullback entry, let's say. I can't hear you.
Sorry, I was on mute. Okay, I just realized that. I have another question here from Pakshan. He would like to know how to use Power Trade Scanner. What would be an appropriate quantity?
Okay, Power Trade Scanner is trying to highlight a certain large number of trades that has happened within a short time. Basically, that's the that's the scanner's work. So if it's, let's say, I want to configure X trades happening in 10 seconds, 20 seconds, that kind of a thing. Okay, so generally for Bank Nifty, what I've done is 10,000 10 seconds is good. Nifty a little higher, 25,000, 20,000, 10 seconds is good number to configure. You will get those dotted alerts plotted on the chart. It's just a more of a more easier visual way to look at it, instead of trying to look at the charts all the time. That okay, a dot has happened on Power Trade. Let's say 10,000 on Bank Nifty. That gives you a sign that a large number of trades happen. So it's take a note basically. That's it at that level. So as I said, 10,000 for Bank Nifty, 10 seconds, 25,000 Nifty, 25 seconds. Again, you tweak it a bit. Sometimes, some days markets are very fast moving, large orders happen, news flow. Then you try to increase that number, either the time factor or the volume factor.
Okay, brilliant. Angad, I'm sure you're able to see the questions coming up here on Zoom as well. Would you like to take a few of them, please?
Zoom.
Yes, absolutely. I'm just quickly going through for order flow. Should we look into spot chart or future chart? We usually look at future chart. The main reason being spot is not traded, right? So it doesn't have volume, and order flow works on the basis of volume generated, market orders generated in real time, right? So always look at futures charts, guys. Spot is we cannot use the cluster or the imbalance chart, which falls under the order flow category on the spot on the spot index. Cost of GoCharting is around $1,200 essentially. Why buy and sell numbers? Buy and sell numbers are different because of the different imbalance in the market and sell orders. Mahesh, Akhilesh Vishwakarma, sir, how can I use this on Fires? I think you can log in with your Fires account, or you can go into Fires directly, and you have certain abilities which GoCharting has directly provided for free for the Fires terminal. How to get these levels on chart, what time frame is done during live market.
How to get the levels on chart? Sorry, Angad, you're answering. Go ahead, please.
Yeah. How to get these levels on chart, essentially. I'm assuming he is mentioning these levels basically on chart is you'll have to log into GoCharting and then use the imbalance chart, and you will get these levels. There's a certain functionality called automatic support resistances based on the market, based on the market orders generated. So you can get these levels on a chart automatically. PPT, we'll ask Santosh sir to share this PPT.
I think the video will be shared anyway, so
yes.
you can see. Yeah, so
the video will be present on YouTube for people to watch even at a later time. So all the data is there, nothing is lost. Angad, I would invite you to come back on camera, please.
Oh, sorry. Oh,
thank you.
Sorry, I was. Yeah, instead of color gradients, can we highlight maybe like bold with color node values based on their respective values filter that we can specify? Not currently, but yes, you can change the color of the gradient, but you cannot filter some things out of it. I tried to learn on other videos. Is it true that should we be comparing values in a candle diagonally? Yes, Abhilash is asking this question. Should we be comparing buy volume versus sell volume diagonally? Yes, and there is a reason for it. If you look at the order book, usually the market sell orders are hitting the best ask, and market buy orders are hitting the bids on the below, and it's just the way to interpret that.
Angad, I have another question here from Praveen.
Yes.
And he wants to know, is there any backtesting system in GoCharting?
We don't currently have backtesting, but we are looking into how we can provide this functionality in the.
But there is a replay feature there, so you can do a manual thing, backtesting with a bar replay thing. So you can go back and play from a certain date. Okay, that is there.
Yes, absolutely.
Okay, the charges, I think there's a question on charges, Angad. So I think, as Angad said, it's about 1,200 for a 10 symbol pack. That should be good enough for most cases. So really, low key starting point if you really want to do. Okay. What else?
A lot of people are asking how we can connect with Santosh sir. I have left the links. The links are in the video as well. They will be posted. I'll probably share it again. It's go and search FNO Traders on YouTube. He doesn't charge for all of this. It's all free on his YouTube channel, and do join his Telegram group. We have a healthy discussion over there every day on all of our market views. Everyone comes down, shares their own knowledge. It's a healthy community. Everyone should join. What's one? How much time do we have? We have 5 minutes, so I'm just going through the questions very fast and just trying to pick questions which will help most of our audience right now. Okay.
Difference between data provided. Does it provide tick data? So it does provide tick data. I'll take one question. Yes, it is a tick data. Okay, at different time levels for across all time frames. So you can use from 1 minute to 5 minutes to 1 hour to 1 day. Okay, so even the profiles, you can get a tick based profile. Okay, and it does provide tick data. So that is an advantage. So other charts will have a snap data, which is basically the lowest level data that you can see is at a 1 minute, but this is at a tick data level. Okay. Please show the PPT slides one again. PPT, I think we'll share it on the YouTube. So yeah, that's there. Okay.
This one question has come back a couple of times. How to enable GoCharting in Fires? Shrikant Reddy would like to know.
How to enable GoCharting in Fires?
So you can basically, I think Consultant answers, you will connect to GoCharting, and then there is a broker integration there. You can choose Fires as a broker and add your Fires with your API details and other things. Then your Fires is connected to GoCharting, so you can even trade live via GoCharting itself.
Can we use GoCharting on phone? Yes, you can. We have multiple applications. We also have a very powerful option chain product called Options Desk, which you can use. It's a live updating option chain product, which you should check out. We have applications, mobile applications for the charting product, as well as the option chain product for both iOS and Android.
Okay, demo. I think there are a lot of demo videos posted. So, live chat analysis, etc. posted. You can go and check. Okay. And I think Santosh, okay, they've already answered that. Can you, I'll not take a specific chart example today, but you can come back and discuss in one of our forums. We can do that. Okay. Is the GoCharting, so templates available? Yes, templates. So as I said, if you really want to get started, all these templates is something I've shared. So that's another feature. I can actually configure everything. I share it as a template. You just copy paste and save it. So I have shared all templates for market profile, volume profile, order flow. You can go and use it. Okay. Just copy paste the link and you can use it. How to find market orders placed and limit orders placed? No, the order flow is all about understanding market order and their behavior. So yeah.
So those who want to actually see how to connect to Fires, there is this tab here called brokers and
options. Yes. Settings I've answered. Can you take Lupin? No, I cannot take chart specific. So if you're trading NSE futures, okay, while he opens the charts and connects, I'll say you take the 10 symbol futures pack. If you want to see the order flow data of options, then you have to take a separate options pack. So otherwise, I think the futures pack is good. And then anyway, option charts you get on your Fires platform, anyway, the normal candlestick chart. So I think my recommendation is take the futures chart pack, analyze on futures, take one, don't take everything to start with, start small, get used to it, and then move to the other plan. So everything is on the base plan itself. So the order flow packages are free. So it's just that data pack that you buy at this point. Okay.
Just I'm seeing that there is a lot of demand for Hindi as well. If you want us to be on Fires again and do this in Hindi, we are happy to do it, probably based on Vignesh's calendar. We'll figure it out.
Do a Hindi one specific, yes. So I think that's fine.
We do have a few webinars scheduled as well. So we will announce redoing this webinar in Hindi very soon, very shortly for the viewers. Ladies and gentlemen, of course, we are pressed of time. So if you have any further questions, please write to admin@gocharting.com. That's admin@gocharting.com. Yes, go ahead, please.
No, I think you can share the last slide, Angad, if you want to share, has the GoCharting link and all that. If others want to take a quick note, basically with the email ID, I think it's better they land in your Twitter or a YouTube page. I think the last slide. Yeah.
This is the GoCharting channel. This is the GoCharting Twitter channel. Go and join FNO Traders. There's a lot of content. We've created playlists over there. So each topic is broken down into a smaller chunk. So it's a 5-minute video, and it'll take you through a novice, a newbie to an intermediate pretty soon. And then the key thing with using order flow is essentially it's more of a discretionary trading tool. So it's an art, but it also takes practice. So the more you use it, the more you can eyeball what's happening in the market. Essentially, in the beginning, you will definitely feel a little bit overwhelmed with the data being generated. But the trick to it is, draw your levels. Doesn't matter if you're using price action, RSI, you have your own setup and chalk out your own levels early in the morning to build your market map. And at that exact level, what is happening? Just check out with order flow what exactly is happening. Is it confirming your conviction, confirming your bias? And if yes, then there is more conviction while taking a when taking that trade. Don't keep one of the biggest mistakes what newbies do is try to interpret everything at the same time, and they are stuck on the screen looking at all the numbers. They go into analysis paralysis. Don't do that. Keep it simple, like sir said. Have your levels out, use your own setups, and at that level, what is order flow time trying to do? And the only thing you have to ask every time you're looking at order flow charts is essentially, who is winning this candle? Who is in charge of this candle? Who is in charge of the market? Who is in control of the market based on the numbers being generated at your levels? I hope you've got it in a gist. If you guys need any help, please do drop into these channels, and we are always there day in day out trying to help you and make you a better trader essentially.
Vignesh, there is a question. I think, does Fires charge if login via GoCharting?
I will have to get back to you on that, Santosh. I'm pretty sure that we don't not charge for creating an
I also
account
don't
on
think
Fires,
so.
though.
Yeah, I don't think so. Yeah, I think it's just the API thing, whatever is involved around the API.
Right.
But otherwise, I think
So-
there are no charges.
Absolutely. So people can
Yeah.
create their account on Fires for no charge at all. Okay. So
Okay.
Angad, that was beautifully explained. Thank you so much.
Absolutely.
My sincere thanks to you as well as Santosh sir for this wonderful insightful experience. I'm confident that the viewers will take advantage of everything that they have learned here today. So, ladies and gentlemen, I would also like to bring to you, what Fires does. We bring you the most relevant and beneficial knowledge. So we create a lot of these webinars for your specifically for your knowledge, and I would recommend you to subscribe to the Fires channel to make sure you stay updated at all times. So, our next webinar will be conducted in Hindi on the topic of option trading, how to use option data to enhance profitability. This webinar will be conducted on 23rd September at 5 p.m. So Friday at 5 p.m. on 23rd September. To register, please go to fires.in/webinars. I'll repeat that. It's fires.in/webinars. Thank you all for joining us today. Thank you, Angad, and thank you, Santosh. See you at the next webinar.
Thank you guys. Thank you, the Fires
Thank
team.
you. Thank you.